How's it going, everybody? Welcome to episode number 6 of Laredoans Behind the Business. I am here with Mrs. Katherine Sillas, and she is with Dream Big Mortgage. She just recently changed her name. That's correct, right?
Yes.
Yeah. Before you were Mortgage Financial Services, right?
Yes.
Yeah. So she now has her own, I guess you would say your own little mom and pop shop, right?
Yes.
Yeah. And not corporate shop anymore, right?
So how it kind of works on the mortgage side, we need the big money banks behind us. So I have opened my own. I guess it's kind of similar to like when you're a franchise, but we're a DBA. So we have the big bank that's behind us that gives the money.
Okay.
But we're locally ran and operated. They just do all of the funding and financing, I guess.
The big portions of it, right?
Yeah.
Yeah. Okay. Yeah. Well, I just wanted to say thank you for having me here in your office, your little meeting space, and thank you for reaching out to Laredoans Behind the Business and getting in contact with me. I think it's really important, like we were just talking about a little while, like just shortly ago, how important it is to support local.
Yes.
And that I'm gonna sound like a broken record here, guys, and you're probably gonna hear it almost every episode. But for me, it's important to get the message across that I am here to support any small business that I can. And when I heard Katherine reach out, or her team reach out, I thought, man, I would love to have you on. But you, at the time when I bought my house with you, you were under Mortgage Financial Services, and I thought, man, I hate vetting people out because everybody here in Laredo and even the franchises, they're run by Laredoans. But I'm not here to exclude people. I just want to show love to small business. And now that you're your own small business, well, I'm glad to have you on the show. So
Thank you for having me.
So thank you for being on the show, and thank you for being a part of the show and supporting the show. So yeah.
Well, and yeah, if I can just add, it's kind of like what I was mentioning to you is that I think it's really important for any community to embrace our local businesses, support our local businesses, because ultimately the people that run those businesses, they're not only providing jobs, but they also have families, and therefore we're all in this community together. We have the connection to see our community grow, thrive, and do what's best, in this case for Laredo.
Absolutely. And it goes back to the saying, I've heard the saying before where they say when you're supporting a small business, you're not putting money into the pockets of, a corporate business or whatever the case may be. You're putting, you're sending kids to school, you're sending them to soccer practice, or, whatever the case may be.
Yeah.
So you're supporting that family. And
I can vouch for that. I know personally I have sponsored uniforms for football, basketball, cheer team, and even some of my customers have come to me when their children, whether it's football, cheer, dance, band, we've supported and sponsored them for their efforts too. So I try to always help. I'm sure I'm going to get flooded now with sponsorships, but I'm kind of known. I don't say no. I always do try to help them because, again, it helps our community and our kids.
yeah, absolutely. One of the questions that I always like to start with people when I get them on the show is, how did you get involved in the business that you're in? Have you always been in the mortgage side of business, or did it start some certain way? Or
Yeah, so mine's kind of a long story in a way. I'm not
Let's hear
originally
it.
from Laredo. I'm originally from St. Louis, Missouri.
Really?
I'm a Texan now. I've been here. I moved here 2 weeks before Christmas in 2004, so I kind of tell everybody 2005 because it's easier. But
you're past the point of
I've drank the water.
Yeah, you drank the water. Yeah, you're a Texan now.
I'm a Texan.
That's good.
So, and I love Laredo and I love Texas, but I started in mortgage before in St. Louis. So when I moved here, it's kind of all I knew and what I had done in my at least somewhat adult life.
Mm-hmm.
So naturally I just looked for a job in mortgage. I came more from the back end, like you mentioned, corporate background, processing, things like that. So when I moved here, I started off in 2005 and haven't stopped.
Wow, that's really
So I've been
interesting.
a long time.
So, and since 2005 and up until this year or maybe last year, you were with Mortgage Financial Services, or
No, I've moved around. I've worked for some of the bigger banks.
Okay.
Worked for a local small a mortgage broker. Went back to a bigger bank. So I have moved several different different companies, different places, and then to my current spot right now.
That's awesome.
Which we're starting our own.
Your own little, yeah.
Mortgage, yeah.
That's awesome. Do you have family here in Laredo? Is your husband from Laredo?
Yeah, so I'm married. I have 2 kids. I have a 10-year-old and a 13-year-old. My husband's born and raised Laredoan.
Nice.
He was in the military, so he left Laredo. And again, once you drink the water, you can never leave.
Yeah.
His current job brought him back, and again, we've been back. I've been here since he got here, so
that's awesome.
Since 2004.
And how do you like? Obviously, you've been here for more than 10 years, more than 15 years. How do you like Laredo?
I honestly love it.
Yeah.
We've had many friends that I kind of think that your happiness in a city or home is what you make it. But I've really embraced. I love the people. They're so friendly. And again, being from a bigger city, and then I actually, prior to moving here, had a job with Wells Fargo Mortgage at their corporate headquarters in Des Moines, Iowa. So I lived a year there. So I have lived in other places, but I love the culture. I love the people. Everyone's friendly. I know we complain about traffic and it's getting worse, but it's nothing like traffic in a big
like
city.
San Antonio or something, right?
I don't miss the colds at all. But
Speaking of cold, it's cold outside right now. So
I really do. I love Laredo. I love the people. I love everybody here. And I do consider it my home. And the people, I don't feel anymore like I don't feel like an outsider. I don't feel like I'm not from here.
That's awesome. That's good to hear. And I'm sure the people watching and listening are kind of refreshed to hear that. You said your husband was in the military. I want to say thank you for his service on behalf of me as a veteran. I know how difficult that must be on the family part because traveling to different duty stations, that's a big commitment. So thank you to you, to your family, and to your husband. Your husband was in the Marines, or he's in the Marines. Mm-hmm. That's awesome. Well, thank you again. And you lend out different types of mortgages to all kinds of people. How does the VA loan, because I know people have different questions for different types of loans. There's the FHA loan, the VA loan, and other types of loans out there, right?
Yeah. So, obviously VA, it is my favorite loan program out there. It really is the best home loan program option out there, period. But again, my father, Vietnam vet, husband vet, but I'm always astounded at how many veterans don't even know about the benefit of the VA home loan, or if they do know about it, they have this big misconception that it's really difficult, that it's not a good option. I think a lot of it is like old stigma out there. And let's be honest, the military doesn't do the greatest job of educating our service members of the benefits that are available to them. Yeah. And so a lot of it's that they just don't even know.
Right.
But yeah, so the VA program, it's exclusively for veterans only. Active duty or, National Guard reservists. Mm-hmm. They don't require a down payment. There's no mortgage insurance, so there's a lot of benefits and savings with the program that only a veteran can get.
Right.
You have to be a veteran to use that program, or a surviving spouse can get it too. Yeah,
absolutely. I wanted to say thank you for helping me, my wife, when we moved back to Laredo. We got in touch with Katherine through Jason Kirkpatrick, and shout out to Jason Kirkpatrick from Rooftop Lounge. He put us in contact with Katherine, and she was just incredible. You and your team are awesome, and you guys had no basically like red flags. You were able to help us out in any way that you could, and you got the job done as quickly as you could, and you got us in that house within a month, really, which was incredible. So thank you again. And so aside from the VA loan, there's other types of loans out there for, I don't want to say regular people, but not veterans. Veterans are active. Yeah, civilians. There you go. What is the more preferred loan that someone could use when they're looking at a property?
That's a tough question because the preferred loan for one person may be different. What I personally try to do is, depending on everybody's situation, is provide the best options for those situations. So FHA is probably one of the more popular ones, especially here. a lot of people think you have to be a first-time home buyer, and that's not the case. But FHA was originally designed to help first-time home buyers.
Okay.
So what the reason we do a lot of FHA is they have lower down payment requirements, but also lower credit score requirements. So again, somebody traditionally who might be just starting out, maybe hasn't been educated as much on credit or had the opportunity to build credit, and maybe their credit scores aren't the strongest. Maybe they've had a couple mistakes. FHA does provide a solution that still gives them financing, still with good rates. It's backed by the federal government. So that's a really popular program. We do a lot of down payment assistance here. So we participate with down payment assistance programs that are offered by the state. So that helps out a lot of our first-time home buyers who maybe don't have a bunch of money saved up. Or some of them even do have a little bit saved up, but if they can use that towards other stuff that they're going to need for the house, furniture, appliances, whatever, that's an option for them too. So usually when I meet with them, we try to get a feel. I mean, conventional is a program that even also has low down payment options, 3% down payment options. But conventional traditionally likes to see higher credit scores. Conventional is really popular, especially for second-time home buyers, because if you do have 20% or more down, you don't have mortgage insurance, whereas on FHA you do. So again, it all just depends on everybody's situation and which program is going to be the best suited for them and give them the best options.
Right. Gotcha. Now, with, I guess, the market, the way, or the housing market, I guess, the way that it is now, compared to when my wife and I bought the house with
night and day difference.
Yeah, completely different. Because we locked in our house at 3.7, if I'm not mistaken. What is the going rate right now?
So when you guys closed, when? How long
February, almost a year ago. February, February of last year.
Yeah, so you got in right when this market started to shift. And it's just crazy, what they say, what a difference a year makes. But we literally had two of the craziest years in the housing industry, and this was like nationwide. Super low rates. Which was great for home buyers, those low rates, but what it also created was kind of like a run on the houses. So it also created the demand and people offering over asking, over appraised value, 20 people trying to get the same house. It was pretty crazy.
Right.
So things, because of what's going on in the economy, of course the feds have continued to raise rates.
Right.
And the interest rates have gone up exponentially from a year ago. I think everything we're hearing is we'll probably start seeing things start to stabilize and come back down a little bit, probably in the early summer
of this year,
May time frame. Yeah.
Okay.
Now, how quick they'll drop, who's to say? I don't even like to make predictions anymore because it's just that, a prediction. And even though I've been doing this a long time, everything that's been going on, at least for the past year, is doing the opposite of what it normally does anyway.
Right.
So, I mean, even some of the biggest gurus in the industry who've written books and everything
Yeah.
have been wrong. But, we are seeing interest rates on the higher end. But again, whenever there's problems, that's an opportunity for solutions.
Right.
So what we've seen is, again, where people a year or 2 years ago, sellers, it was what we call seller's market.
Right, absolutely.
They weren't negotiating on the price. They weren't helping buyers with closing costs. We are seeing more and more, and some more than I've ever seen as far as incentives, especially with some of our local home builders, to help buyers. So yes, even though the interest rates are high, and I know these prices are high, they're offering help with closing costs. Even some of them are offering, with that closing costs amount that they're helping with, to buy down the interest rate.
Wow.
So there's become, programs had always been around. It's just one of those, we haven't needed to use them in many, many years. There's even options where they call like a temporary buy down.
Okay.
So it's not like the adjustable rate mortgages, right? That got a lot of people into trouble in the 07, 08.
Right. Yeah, because whenever you hear of people buying a house, they always tell you buy a mortgage on a fixed rate, right?
Right. So these particular, what they call temporary buy downs, it's still a fixed rate.
Okay.
So protection as a buyer, we are still qualifying you at the highest interest rate.
Okay.
That's what you're being approved for. But basically, and only the seller can pay for it, but the cost of, so for easy numbers, let's just say the interest rate is 6% today.
Okay.
Your first year, you'd be getting a 4 if we do the 2-1 buy down. The second year, a 5. And then for the rest of the loan, the 28 years, would be a 6.
Oh, okay.
The difference on interest from those higher payments and higher rate to the lower payment, lower rate is paid up front at closing by the seller.
Okay.
So it's not the same as like an adjustable rate mortgage where you're starting off at a low rate and then can eventually keep going up. This is just an incentive. And it's best suited for people who maybe get a raise every year. And they still, again, qualify at that higher rate. But, man, an extra $300 could really help in their pocket today.
Yeah.
Also, it's in the hopes that if these rates do stabilize and start coming down, that you would just refinance to the lower
rates, right?
Hopefully before that higher rate ever comes into play.
Right. But at this point, it's kind of a gamble because you don't know what the market is going to do, right?
It is. And I try to do a really good job of educating people, including salesmen
in
our industry who are selling it because, well, one, you have to qualify for the refinance. And 9 times out of 10, most people will. But again, when these rates dropped before, I did unfortunately have past clients who had a loss in job or maybe a change in their work or payment type. Maybe they used to be W-2 wage earner and now they're self-employed and they've only been self-employed for 6 months. Things like that. Credit drops. So, yes, we will always refinance you if you qualify to refinance based on credit and qualifying.
Right.
But again, if things like that happen, you may not be eligible. Or who knows, maybe the rates never go down.
Right, yeah.
Maybe they don't.
Yeah, and you're kind of stuck in that little limbo there. Now, here's a question that I've always kind of wondered, even when we were buying our house. How are the interest rates determined? Because I feel like that's the big thing with people is all the interest rate, you know? And when we got our house locked in, I said, man, that's a really good interest rate. Might as well go for it. So how is that determined, if you don't mind me asking?
It's determined by a lot of factors. A lot of people think we just make it up and pick it out. If it were up to me, they'd all be at 0%.
Right, yeah.
So I wish I had control. It's determined a lot by the investors who buy in mortgage-backed securities. So the way you can kind of look at it is if you're going to invest your money in something.
Right.
Mortgages are they're a long-term. Most traditionally are 30-year fixed rate, right?
Right. Mm-hmm.
So it's a long-term investment for people investing in it. But it's, for the most part, a pretty secure investment.
Mm-hmm.
So right now, because of inflation and everything else, and again, mortgages were at their lowest rates, the global economy is not doing that great. So investors are wanting to invest in the mortgages. So they're also driving up those interest rates because they want to make more money, bigger return on their investment.
Right.
Now, as other things become more appealing for them to invest in, they'll pull out, and that's when we'll see interest rates start to drop for consumers. But a lot of it's determined by so many factors. I mean, the stock markets, global investments, the federal treasury.
You're not in control of that overall. Yeah. So if you're watching that and you decide to come and get a mortgage with Katherine and her team, and you might get a higher interest rate, don't blame her. She's not at fault. She's trying the best that she
don't
can.
Don't messenger. I want them low.
Yeah.
But sometimes, speaking on this topic, I've actually showed customers where what's the rate? We want the lowest rate. But sometimes on a loan program, the lowest interest rate might not give you the lowest monthly payment or the best option. So I'll use an example. If you have a really, say you're top tier on your credit, maybe an 800 credit score, and you have 20% down payment or more.
Okay.
Well, if I run the rates, I could probably get you a lower rate on an FHA loan than I would a conventional loan.
Right.
Conventional just right now happens to be a little bit higher.
Right.
But FHA, even if you're giving a large down payment, 20% or more down, they still require you to have mortgage insurance on your monthly payment for a period of time.
Okay.
And what mortgage insurance is, it's insurance that covers the lender in case of default. It's not the same as like your home insurance in case there's a fire or something like that. It's literally insurance that covers the lender in case of default.
Okay.
FHA requires it no matter what.
Right.
Conventional, if you give 20% or more down, you don't need it. So I just had this conversation with a customer last week, as a matter of fact, and it's like, wow, that the rate's so much better.
Right.
We're like, let's look at it side by side. You still have a lower monthly payment, even though the rate's higher because you don't have that mortgage insurance. And
Okay.
he had the 20% down, and on FHA, even with the 20% down, it has to stay on there for 11 years.
Right.
So it was like $150 a month for
For
every month for 11 years,
Right.
just to get a lower rate.
Yeah, no.
No, it's not worth it.
Right.
But again, most people, we're just taught that, we're taught what's a rate, what's a rate, what's a rate.
Right. Yeah.
So, again, the interest rate, just because it's lower, doesn't necessarily mean it's better.
Right. Understandable. I mean, that makes a lot of sense. I was gonna ask you the question that I gave you before we started recording. If there are more than one family looking at the same property, and other people might have this question, because I know me and my wife had this question. If there are more than one family looking at the same property, are you the determinant of who gets that property, or is it the seller, or who is it?
Yeah, so what you're referring to is like when we have like multiple offers. So when we saw this a lot in the past couple years when it was kind of chaotic with the housing industry, where you have a house for sale and maybe 3 or 4 families all want that same house. They all put in an offer. So I'm glad I don't have a say-so in that whatsoever. I approve you for the loan. I give you your approval letter.
Right.
Now, typically the buyer has a realtor that's representing them, and the seller has a realtor that's representing the seller.
Okay.
So the realtors will submit their offer, and then that seller's agent will present all the offers to their seller, and then they determine who gets it.
Gotcha.
I've even seen some funny stories when, again, it was a multiple offer situation everywhere, where people were doing silly little like love letters to the seller.
Oh, really?
I'll name my firstborn after you.
Oh my
throw in a
God.
steak dinner. Again, luckily Laredo, we weren't that bad. We did have some, but I heard Austin, San Antonio was absolutely
Wow.
crazy. But ultimately, it is up to the seller. And so usually, most sellers are going to go with whoever gives them the highest, right? Whoever's going to give them the most money.
Right, the best bet.
But again, if they have 2 that are side by side that are offering the exact to the dollar amount, then that's where their agent sometimes will check it. Again, who's doing the financing? Is it somebody that's trustworthy, that comes through, that gets the job done on time?
Right.
Because I've gotten the calls too, like, hey, how solid is this one? And things like that. But
now
that's usually what will make them make the decision.
Right. Yeah. Now, let's say that you had 3 or 4 families and they all came to you with the same property. You're still not the determinant. Do you still approve everybody's loan in case the buyer decides to go on, X, Y, or Z?
Yeah, and again, I've had this happen, and one, privacy, I can't tell them, because
Right.
if I were to tell you, oh, I've got another family that wants this house and they're going to offer $160,000. Oh, okay, well, maybe I'll go to $170,000. Can't let them know. My job is I approve them for the loan amount, whatever price they give me. And that being said, when I approve them, I'll usually tell them a max, what their limit is, how much they can't go over.
Right.
Because ultimately, whether it's that house, we approve them, and then they can go for any house, even if they don't get their offer accepted on the house they come in asking about.
Gotcha. Absolutely. Yeah. Yeah. And that was another thing that I liked about you and your team, is that when we bought our house, you told me and my wife, look, this is what you're dealing with. This is how much the mortgage is. This is how much the monthly payment is going to be. Do you think you can afford it? And I remember I was talking to you on the phone and I said, it's going to be kind of tight, but I think we can do it. I think we can manage it. And you said, okay, as long as you're comfortable. I'm not, and you and your team were not pushy at all. You're not there to, I don't want to say not make the sale, because I know you guys want to make the sale, but ultimately you're thinking about the families first.
100%. So one of my biggest frustrations with our industry as a whole, the real estate and mortgage industry, is there are people that are in it just to make a sale and that's it.
Right.
But as I mentioned, I have been working in mortgage since 2001, here in Laredo since 2005.
Right.
I don't have any other options. This is my career.
Right.
So we want you to be comfortable, because ultimately, if you end up in foreclosure and lose that house, I've lost a customer for life.
Yeah.
My hope is that we give you the service that when you're ready to buy that next house, you come back to us. When you have friends or family that want to purchase, you refer them to us.
Right, absolutely.
And again, what I always tell people, what we approve you for may not be what you can afford.
Right.
Only you know that, and every individual is different.
Mm-hmm.
So the first question I always ask when someone comes to me is like, what do you feel comfortable paying a month?
Right.
Before we even do anything, what do you feel comfortable with? Because then I can have an idea. Just because maybe you have low debt, good credit, we may be able to approve you for a lot more. But
Right.
like I said, that just goes off of what you qualify for on paper.
Right.
It doesn't take into account if you like to take vacations, if you like to go out to dinner, if you like to do things. Some people, they want to max themselves out. They want the biggest house because that's what they want. They spend all their time at home. Everybody's going to be different.
Right.
That's where I always say, what are you comfortable with paying? Not what your max is.
Not what your max is, right? Yeah, because then that will put you in a situation that you don't want to be in. Yeah.
And as we've seen, especially over this last year, with costs of goods going up, I mean, eggs is the hot topic right now.
Right. Yeah.
I saw something on Facebook yesterday. I think my husband showed it to me. It was like the 2023 engagement ring, and they had the ring up and it had a little fried egg. But, it's like we go in trends, but, gas going up, with cost of everything going up. If you have yourself completely maxed out, and I wonder, like, how are some people doing it? If you're on a fixed income,
right.
With everything else going up, how can you afford to eat? How are you going to afford to pay the light bill?
Yeah.
I think even the light bills have gone up. Everything's
They
gone
have,
up.
yeah.
So
everything's gone up.
you want to give yourself a little wiggle room because, again, we never anticipated, I don't think, eggs to be at the price they are right now.
Right, yeah. It's one of those, not luxuries, but it's one of those things that we took for granted, and now they're at the prices that they are and say, how did we get here, right?
But who'd think we'd say eggs is a luxury?
I know, right? Yeah, it's an egg. It's an everyday commodity, right?
I'm not talking about filet mignon.
Yeah, I know, right?
Towns, right?
That's funny. So here's another question. When somebody wants to build a house, what type of loan would they look for, or how would they go about going through that process?
So there's a couple ways, depending on what they're doing. 9 times out of 10, at least in our market in Laredo, it's really no different of a process. And what I mean by that is, like, most of our builders are here in Laredo.
Right.
They already go in, they've bought the lots, they hold their own financing to build the house.
Okay.
So usually we approve them up front.
Okay.
We approve them for the house. Builder builds a house. Usually about 45 days or so before the house is finished, we start getting everything updated and finalized for closing. The buyer closes when the house is done.
Okay.
That's how we do it, I would say 99.9% of the time in Laredo. Now, in other instances, if they want to do maybe a very custom-built home, or maybe they own their own property. Or they
Right, like a
want to
ranch
find
or
a
something,
lot.
right? Yeah.
Then there are also options that are construction loans where the buyer, instead of the builder, gets the loan for the lot. They get the loan for the construction. They find their builder, and then it pays the builder as the house is being built.
Gotcha.
And we don't do those very often here just because of the way the Laredo market is, and that our lots are usually developed and sold to the builders.
Right. Okay. That makes sense. And we were talking a little bit off camera, but Catherine was mentioning that, nowadays there's a lot of paperwork involved when buying your mortgage, or whatever the case may be when you're buying your house. I remember when we were buying our house, our mortgage, or whatever the case, or whatever the term is, we were waiting on Amanda's W-2, and we were waiting and waiting and waiting, and I thought, man, we're gonna lose this house if we don't get that W-2. And you were just saying how some people freak out because they need all this paperwork, but why is that? Like, why do they need all this? Why do you guys need all this paperwork? I understand it's a big loan, right?
Yeah, but the thing is, we have Americans as a whole, we're like a culture of credit, right?
Right.
And really, when you think about it, up until if you're a first-time home buyer, never bought a home before, up until that, anything that you may have financed has been pretty simple. And think of it, you're at the register, even at Walmart. You want to apply for a credit card and save 10%, and boom, you're approved right there, and there's your card.
Right.
Especially if you have decent credit. A car, you go in to buy a car, you can even buy a $100,000 Land Rover. As long as your credit's good enough, they don't ask for you fill out an application, but they don't check, they don't ask for anything, and you walk out same day with keys in your hand.
Right.
So on the mortgage process, one, it's a 30-year loan.
Right.
So
that's a big commitment.
It's a big commitment.
Right.
They're trusting that you're going to pay back $200,000, $300,000 or more
right.
over the life of the loan. So we as lenders are required, these are guidelines that are set by the federal government. So I always say, don't shoot the messenger. We're just doing what we're required to do. Like, they make us ask for all these documents.
Right.
But they actually, and it's a good thing in a way. I mean, even when it comes to the car loan, I mean, if you have good enough credit, you can say you make whatever and walk out of there with a car that maybe you can't afford.
Right.
So we don't just take your word for it. If you say, I make this, I work at XYZ company, make this amount of money, we're going to verify everything.
Right.
So, again, most consumers, and I'm finding it more and more so, that they're kind of shocked or taken aback by, what, you need my bank statements, you need my pay stubs, you need all this stuff. Like, they don't feel comfortable with it because they've never been asked for that for anything that they've ever bought.
Aside from from the
Except
house,
when they
right?
go buy the house.
Right.
So yeah, there is paperwork involved. I always tell everyone, look, everything we ask of you, it is a reason. It's guidelines that we have to follow. That if you go with me, if you go down the street, if you go online, anywhere you go, we're going to ask for the same amount of stuff.
Right.
The same exact stuff. It's all the norm. But they do verify. So if you tell me where you work, I need to see those pay stubs.
Right.
They're going to contact your employer also and make sure that you do work there and when did you start and how long you've been there.
References.
They're going to check the W-2s.
Right.
Same with the bank statements. They want to see that you do have the money that you need to close. So again, I like to tell everybody that I know it's a lot of paperwork, but everybody buying a house has to go through it.
Right.
And once you get the keys, as you can probably, attest to, once
Yeah.
you get those keys in your hand, you forget about having to, like, us bugging you for a pay stub.
Right.
It's all worthwhile. But again, I have even recently had people that they never even thought about it. They never even thought that they would have to provide anything.
Yeah, well, I mean, like I said, it's a big commitment, and they want to see that you can basically make the payments and pay off that loan in that 30-year time, right?
Yes, because ultimately, I mean, foreclosures are good for nobody, including the banks.
Yeah, I know.
It costs them a lot of money, but ultimately, again, the home ownership creates communities.
Mm-hmm.
And when you have, the children growing up in the street and they all go to the schools and everything together, when you start having foreclosures, I mean, I always think about how heartbreaking as a parent, that, your kids
for your
open
kids
this
to lose a
home,
house,
you
yeah.
have to lose it and get out of there. And then sometimes those homes sit there vacant. They get sold for really low prices. So it's not good for anybody.
Right.
We don't want to set you up for failure.
Yeah, absolutely. And like you mentioned, I could definitely attest to that because when we walked into the door and we finally saw the house as our own, we're like, oh man, this is really nice. Like the W-2 was a really pain in the neck.
It,
yeah, but we're just like, finally, like it's here, like it's ours. Like it doesn't even feel real. It feels like a dream. Hence, Dream Big Mortgage, right?
Yes.
Yeah. Are there any other frequently asked questions that you get from clients or people just calling on the phone
Yeah, so a lot
that
of
you'd like to
people
address?
think that you have to have the most perfect of perfect credit. That's not true. There are loan programs for lower credit, and again, life happens, mistakes happen. Sometimes it's an honest mistake. You thought you sent the bill and you didn't, but
Right.
there are programs out there for people who have had credit challenges. And yeah, you may have a little bit higher of an interest rate, but it's the same on credit cards or anywhere else. But you don't have to have perfect credit.
Okay.
People think you need to have a lot of money. Again, VA loans, zero down payment is required, but we also have down payment assistance available for people who need help with down payment. So
Okay.
don't let that hold you back either. I mean, ultimately, when you're paying rent, you're throwing your money away. You never
Right.
get it back. When you own a home, you build what's called
Equity, right.
and you build it in two ways. One, when you're paying off your loan, I mean, the way that you can kind of relate to it is almost like a 401k or a savings.
Right.
That with your 401k, the money's taken out of your paycheck, right? And it's
And it's
put in there,
going-
but that
right.
money is there
Right.
for you.
Mhm.
It's the same as your house. You're paying that monthly payment, but you're paying down the balance of what you owe.
Right, because when you go to sell the house and if you sell it for more, then you get
Yeah, so
you get your
you're not only gonna
return
get
on
back
investment.
what you
Right.
paid, but traditionally home values have gone up.
right.
So, I wish I would have kept my very first house I ever owned, but we were looking at some the other day, in certain areas that what they originally were selling for, and again, it had been 15 years, but
Right.
not only did you pay down the balance, but if it went up $100,000 in value,
Right.
you made money.
Right. Yeah, absolutely. You didn't lose money. And that's how me and my wife were when we bought our house in North Carolina. We bought it for 128,000 and then we sold it for 160,000. So we made some good money.
In how many years?
It was in 3 years.
So
3.5 years. Yeah. In 3.5 years.
I can't think of anybody whose stocks or 401k, maybe if you were one of the early investors in
Right.
Bitcoin or something, but
Yeah.
to make that kind of money in just that short of a time.
Yeah, it's a good investment. Investment.
And home ownership is traditionally most people the home is their biggest asset.
Mm-hmm.
And for some people, a lot of people don't have a retirement, but they're home.
Right. Yeah.
So even though the rates have recently gone up, until interest rates get to 100%, it's still better to buy than rent.
Right. Yeah. Absolutely. And I like that you said about renting, because I have a friend. I actually have several friends who rent from places, and I've tried to convince them, go get a house. And even one of them is a veteran, and I've tried to tell him, go use your VA loan. If you're putting money towards rent, that means you can put money towards a mortgage payment. And
when somebody else's mortgage payment.
Right, pretty much. And then even at that, sometimes they might not even fix the utilities that need to be fixed, the AC that needs to be fixed because it's broken, whatever the case may be, right? And with the house, I get it. It costs money. It's money out of your own pocket. But like you said, you're putting that money back into your house, essentially, or back into your pocket eventually when you go to sell it, right? So.
And again, if you have to pay to fix an air condition or maybe a roof leak, like you said, you get it back.
Right.
The landlord.
Homeowner's insurance.
Landlord's winning, not you.
Right, yeah.
Not you. But, so yeah, one of the other questions I do get a lot, which is really on that topic, and we see it a lot in Laredo because being on the border, we have a lot of our federal agents that come here from all over. And they know maybe they're not going to stay here. They're here because it's their first duty station, but they want to ultimately get back to family, or maybe they put in for a promotion out of town.
Right.
So they only are going to be here maybe 3 years, 4 years. It's still usually better to buy.
Right.
Like I tell everyone, people think like, oh my gosh, it's 30 years, but I'm not going to be here 30 years.
Right.
Well,
but you don't have to be. Yeah, you could rent the place out if you wanted to.
That's one. I've had friends over the years that have done that. You can rent it out and keep it as a little nest egg.
Right.
Or you just sell it. And that's where, they put the house, they sell it like you did in your home in North Carolina.
Mm-hmm.
And if you've been there 3 years, okay, they pay off what's left on the mortgage and everything else comes back in your pocket.
Right. Yeah.
You made some money.
Now, let's say somebody moves down here to Laredo and they're only here for, let's say, 11 months. Can they still sell the house even though they just bought the house 11 months ago?
No, there's no requirement.
Okay.
There's no,
because I was always under the impression that you needed to wait a certain amount of time. Maybe it might be that way with the VA loan, but I was always under the impression that you need to wait.
No, you can. Now, most mortgage people probably would hate me saying this, but even 3 months later, you can sell it.
Really?
Typically, the only person who gets penalized is the person who did the mortgage. They get hit with a little fee from the investors for early payoff, but it doesn't affect the buyer or the seller, honestly. So there's no rule. I mean, you can sell it whenever.
Okay.
Now, probably what you're referring to as a VA is like when you buy it, it's your primary residence.
Right.
Same thing. If in 6 months you get transferred and want to sell your house and it pays off your VA loan, you as the now seller, there's no penalties to you whatsoever. So.
Right. And now you can use the VA loan again if you wanted to, right?
Yep. So on the topic of VA loans, people think you can only use it one time. You can use the VA loan 100 times.
Okay.
You can have more than one VA loan at a time.
Really?
Also.
Do you have to wait a certain amount of time before you use the VA loan again?
So that's where it might come into play, where they want to see that the main thing on the VA is that you're occupying the home as your primary residence.
Okay.
So to give you an example, what I've done many times in Laredo, I've had customers that I finance their home VA, and then 5-6 years maybe pass and they come to me, hey, you know what, our family's grown, we want to buy a bigger house.
Right.
Well, if they qualify with both homes and they have enough entitlement left on their VA benefits, they can still keep that home. Now, if you came in 6 months and like, oh, I'm going to buy another primary residence in the same city and it's a similar size, similar price, it may not make sense.
Right.
The thing is, Because they also want to make sure you're not doing it
to make
buy them as investment properties,
right,
and things like that. That gets in a whole
another realm of yeah.
But no, yeah, you can have more than one at a time. You can have multiple. So when you're a veteran, you have the entitlement for the VA. It's how much the max that they will lend you.
Mm-hmm.
Right now, it goes up to. It always follows conforming limits. So as long as the combination of your loans and it goes off the original price of the home. Right now we're at $726,000
of what you can buy on
so
on
if you
home.
have 3 houses, and you could still put zero down.
Oh wow!
Now that being said, if you go over it, you can still use your VA loan. You're just going to have to put some money down.
Oh, okay.
And it's not always like dollar for dollar. It's usually still less
of
a down payment, but it goes off a percentage and it goes into your what they call bonus entitlement. It's a whole nother calculation.
Wow.
But if you sell the house, then your full entitlement's restored. And now the VA, there's no limit.
Wow.
Which is that just passed maybe a couple years ago. So you can even buy $1 million house at zero down.
Really?
Your VA. As long as you qualify.
Yeah, as long as you
qualify with your income. But yes, you can literally go and buy $1 million, zero down, no mortgage insurance using your VA.
That's awesome. That's really good to know. And I'm sure a lot of my friends watching, if you're listening, watching, and you're a veteran, a friend of mine, and you're a veteran, please reach out to Katherine. She will definitely get you in the right direction, and her team will definitely help you out. Another question that I have is, there's a lot of people that move in from out of town. I don't want to say that you might not be discriminatory against other people, but people live here and they stay here. How do you go about getting people to basically come to you and do business with you, basically? So, because there's a lot of people here in Laredo that are from Laredo, obviously, but there's a lot of people that are coming from out of town and they kind of make it their home here for a little while. They use bigger banks, but why is it that they would like to use, or why would somebody want to prefer your business over a bigger bank or whatever the case may be?
Well, I mean, I do encourage people to shop around. Sometimes, again, bigger isn't always better. Sometimes those bigger banks that they think might have the best options don't always. Sometimes the online, especially right now with these online lenders, I won't name any names, but they don't always provide the best service.
Right.
You're just a number to them, literally, and they don't have the knowledge, especially if it comes to like complex issues or things that need a little bit of elbow grease. We get a majority of my customers come to me through referrals, so we are very much referral based. So again, my reputation is everything to me because that's how I get my business. And if we didn't do a good job, the real estate agents and past customers wouldn't recommend us. So that's literally how I make a living, is off referrals.
Yeah, that's awesome.
But no, we do. We get a lot that come in from out of town, and a lot of them, I do finance a lot of people from out of town, especially with all the government agencies here, and typically they're referred by their real estate agent. And again, for that same reason, is they know that we will close on time. They know that if there's issues that arise, that we're going to try to come to a solution and make it happen. So
and like you mentioned, they're not just another number. One of the big things that I like with Katherine's team and herself is that you can come to their office, and if you have questions and you need to have your questions asked in person or whatever the case may be, their team and herself make you feel like family. And I feel like when you go to a bigger bank or to whatever a bigger entity in that case, they don't have that option to where you can step inside and say, hey, look, this is what I have going on right now at the moment. What can we do to fix it? The case may be. So
yeah, and I mean, technology is great, of course, don't get me wrong, we need it, it's here to stay, but I say it over and over again to my team too, is like I feel we've lost like a human touch.
Right.
And prior to the pandemic, 90% of our customers would come in person for everything. Just sign the documents, everything in person. Obviously, other places, other cities, I mean, they thought it was shocking. Like some of my colleagues that worked in other cities, like, you meet with everyone to sign? Like, yeah, pretty much. I liked that because, over the years, some of my closest friends were actually started as customers. And One of them, I financed homes for them. I mean, we ended up becoming really close because it just so happened at the time I was helping them finance their house.
Yeah.
The house they were buying was like right around the corner from the house my husband and I were buying.
Oh, nice.
But I met them because they were my customer, and we ended up, to this day, we're very close friends. And I have so many over the years like that. But I feel that that's something that we're missing, that people aren't personable anymore. They're not. Everybody just can hide behind a computer and email and text. It's so robotic that we're kind of missing that human connection.
Right.
So I like doing business like that. I like that our customers, and I always want them to know, like, you can walk in anytime.
Right.
If I'm busy, someone here will help you, but
you get to put
welcome.
a face to the name.
Yeah.
And that was the really cool thing, you know, whenever we had questions, I don't remember her name that helped us out, but I'm sure she's still here.
Probably Maria.
Yeah, Maria, there you go. You know, we had questions. I'm a big person, and, you know, walking through the door and say, hey, like, look, this is, you know, I'm here. I have a question. I'm not really big on, you know, emails or phone or over the phone or over text. So I prefer to spend a little bit of the gas and come over here and basically get an in-person reaction, if you will.
And that's what I tell people. We will do business the way you want to. If you don't want to even look at us, talk to us, we can literally do the transaction from start to finish by phone. Like, you can even do the full application with your phone.
Right.
You don't even need a computer.
Yeah.
If you want to come in person, we're here in person. You want to call on the phone, whatever you want. Me, I love meeting customers. I like that they come in person. It's one of the things that I enjoy. But not everybody. I mean,
it's not for everybody.
Some people are just, they want to do everything by phone, and they don't want to look at you, talk to you, and that's fine. We can do that too. But
yeah, absolutely.
But I know that there are some, especially talking like the bigger companies, the bigger banks, the bigger lenders. You'll never get a human being on the phone. You'll maybe, but everything's electronic. So we try to offer all options.
Now, with you mentioning COVID, how did that impact? I know that's a big question across any company or any, you know, in the food industry or any kind of industry, right? How did that impact you and the way that you interacted with customers? I know it was a lot of...
Well, it did take a lot of that human touch out of it, obviously.
Right, yeah.
Because it's funny because, like I said, pre-COVID, 90% or more would come in person to sign every document, to bring their paperwork.
Mm-hmm.
And then when COVID hit, of course, everybody like, oh, we can't go in person and everything's shut down. We got really used to using the technology that we've always had available.
The DocuSign and all that, right?
Yeah. So more and more, I think now that things are kind of getting back to normal, we kind of got a good blend of both. Is what I'm noticing is people are still using the DocuSign, but they know that they can pick up you could always pick up the phone even with COVID, but like come in person.
Right.
But that was like the most shocking to me is how quickly we went from doing 90% of them
in person
to where now it's maybe only like 10% or less come in person.
Wow.
And I offer it, but people just they're comfortable now with the technology. They just don't want to if they don't have to. So.
Right. Yeah. That's awesome. Are there any other questions that you get asked often from clientele that you would like answered, or anything that you would like to basically get across out there so that people can, you know, get to know you a little bit better, and maybe do a little bit of business with you.
You know, and we get all different kinds of questions, but no question, of course, is a dumb question. I always tell all my customers, and even if you aren't using me, call us. Like, I'm happy to help. Like, if you have questions, if I know the answer, I'll give you the answer. If I don't know the answer, I'll try to find it for you. I'm not going to have the answer to everything. Things are constantly changing in this industry. And again, there's a million different types of scenarios that can be out there. So, yes, I've seen a lot, but every now and then I have one that even like scratching. Like,
yeah.
I've never heard that before, but let me find out for you. You know,
right.
Let me get you an answer. So no question is a dumb question, but I know another, you know, I guess misconception or misperception that people have is like when it comes to that monthly payment, they think we just like pick a payment out of the hat. I don't know. again, when you're doing a 30-year is the max you can finance. Now, you could do less. I mean,
Right.
you can do 10, 15, 20, but 30-year is the max right now. So they'll see a house, let's say it's 300,000.
Right.
And we give them the payment, like, oh, no, that's too high. I need it at 1,700. Okay, well, at 1,700, you need to look at a home of this price.
Right.
Well, no, but I want that house at that price with the minimum down payment. So what affects the monthly payment? The interest rate,
Right.
the loan amount. So again, do you have 100,000 to put down to bring down that payment, or do you only have the minimum down?
Right.
But it's not like we can just change the payment. It's all determined by the loan amount, the interest rate, and of course the property taxes and home insurance that are included in there. So I know sometimes when you go, like, again, buy a car, it was like, oh, I can afford, I don't know, $900 a month in the car payment. Well, they'll just put like maybe a 7-year loan, or have ways where with us
where they can fluctuate a little bit, right? Yeah.
So,
But it's kind of stuck there with the 30-year mortgage if you decide to do the 30-year mortgage. Now, does leaving a bigger down payment affect the monthly payment on that?
well, of course, because the loan amount.
Right.
So again, going back to the 300,000 scenario, if you're putting minimum down, say 3% versus putting
10%.
50% down,
Right.
or 10% or whatever, your monthly payment. I mean, the taxes will stay the same because
Right.
they're based off the house. The home insurance will probably stay about the same because it's based on the house. But obviously, because that loan amount's much lower, your payment would be lower.
Right. Yeah. And that was one of the big things that we noticed when my wife and I bought our van, is that we put the down payment and our monthly payment went right all the way down, and we're just like, wow, okay, we weren't expecting that. But I mean, that's usually how it works, and if people don't know that, that's why you're here to kind of dispel that myth, right? Yeah. Awesome. How can people reach out to you? There's, you have your website, your phone, if you want to,
So our website, which again I tried to keep it local, dreambiglaredo.com. So go to dreambiglaredo.com. On the website, there's a lot of information regarding different mortgage programs. What do I need to qualify? You can do the application online. You can come by our office anytime. We're at 6402 North Bartlett, suite number 4, in the Geddes Center at Jackman and Bartlett. Call anytime. My office number is 857-3258, or my cell is 286-3066. And you can call or text me pretty much anytime on my cell. Again, I kind of joke with customers, if I'm awake, I will respond.
Yeah.
If you don't get a response, but I do try to respond to text messages, sometimes probably a little more than I should on the nights and weekends, but I do.
Yeah.
That's just how I am. But yeah, no, reach out, any questions. We're happy to help. That's what we're here to help and educate you.
Awesome. That's I really appreciate you being on the show.
Thank you.
Thank you for taking time out of your day to be on the show and have me here in your office. And again, I want to say thank you to you and your team for being such incredible people and helping, Laredoans out, whether it be local Laredoans or Laredoans that are coming out of town and, making Laredo their home for a little while. It's always nice and refreshing to have somebody and have basically your team makes us feel like family. You made me and my wife feel like family. And I think that's what you want to, I think that's what you want to get across, right? Is you want to make your customers feel like family.
Yeah, no, and I always tell my team, whether we have one loan to close or 50, I want everyone to be treated
The same. Right. Absolutely. Yeah. Thanks again for being on the show.
Yes.
Guys, don't forget to like and subscribe on YouTube. We're also on Spotify. And tell your friends, friends. And thanks for watching and thanks for listening. This is Laredoans Behind the Business. I am your host, Jeffrey Ramos, with special guest, Katherine Sillas. Thank you, guys.